Hello traders, the title of this video is Pound Yen FX Trader explains his technical analysis. Pound Yen FX Trader explains his technical analysis. We are on a monthly chart of the Pound Yen currency pair GBP JPY. A very difficult currency pair for most Forex traders. So if you are a beginner or a new Forex trader, you would like to stay away from the British pound yen currency pair. It's quite challenging to trade the British pound yen currency pair. All right, you need to know exactly what you are doing. Okay, so you do not get into trouble. As a new trader, a forex trader, you may trade the euro dollar, the pound dollar, all right, or the US dollar, all right. Those currency pair are a little bit easier to trade than the British pound yen, all right. Let's continue our discussion now, talking about pound yen. FX trader explain his technical analysis. On this monthly chart, what can we see? We can see an inverted head and shoulder chart pattern. It's quite gigantic, isn't it? See here? This is the left hand side shoulder, this is the head, and this is the right hand side shoulder here. And the neckline is the red line here. Alright. If I apply Fibonacci retracement, which I've already done, I'm not going to do it again, to the price action from here, pay attention, down to the low here, all right, the 50% Fibonacci retracement level, or this bearish move down, is the red line here at 16049. 16049. That level is also corresponding to the neckline of the inverted head and shoulder chart pattern. So it is quite a very important key level that one cannot afford to forget if one is trading the British pound yen. As a technical trader, one should not forget the level of 16049, the 50% Fibonacci retracement level of the price action from here down to this level here, which is also equal to the neckline of this inverted head and shoulder chart pattern. Very, very important. So as I was telling trader earlier on in the previous video that I titled British Pound Dollar, trader revealed his trading tactics. We were expecting the British Pound Dollar to continue to rally up near the 50% Fibonacci retracement level. The same thing is already taking place here. I have to say to traders that the British Pound Yen at this point in time is a little bit ahead of the British pound dollar currency pair because it's almost near that 50% Fibonacci retracement level, which is the 16049. Very, very important level. So at this point in time, there is a high chance that the British pound yen slowly but gradually will continue to go up, trying, so to speak, to retest that 50% Fibonacci retracement level at 160, all right, 49. There's a high chance, talking about short term to medium term, that the pound yen will try to go up near the 16049. You can see how it is rushing towards the neckline, which is also the 50% Fibonacci retracement level of this price action. Very, very important. So be aware of it. But if one is buying in this scenario, one should be very, very defensive, all right? Because there's one key level here, all right? We'll talk about this very soon, all right? We'll talk about this soon, all right? This one here, all right? So the first key level to remember is this one here. There are other two key levels that I do not want you to forget. But the most important key level is the red line, which is the 16049. The dollar yen will be, the British pound yen, correction, the British pound yen will become totally bullish if it breaks above the red line and finds support, break above, retest and finds support. There's a high chance that it will become very, very bullish. But it's a huge resistance level that is laying ahead for this British pound yen, and you do not want to ignore it or forget it all right, and not even know about it. You want to know it, all right? The next key level that we shouldn't forget is the pink one here, 16850. That's the 61.8% Fibonacci retracement level of the price action from here to that level. So apart from the red line, which is the most important key level, remember 16850. There's another key level here, is 15178. 15178. This is the 38.2% Fibonacci retracement level of this price action here. So those are the first three key levels that you do not want to forget, but the most important key level is the 50% Fibonacci retracement level. Apart from those three key levels that professionals are monitoring, as I explained to you already, talking about short term to medium term, there's a high chance that the price will try, so to speak, to retest the 50% Fibonacci retracement level. And if you come near that level, there are orders placed already here to sell. And if it start coming down, if you reach this level, start coming down, watch out now for this level here, 14651. Will you promise me that you remember that? That's support level, 14651. And the next key level is 14169. You do not want to forget 14651 and 14169 if the price start pulling back. Where we are now, as you can see, the price now at 14651. Can you see that line? Let's change that into orange. And I will switch to the daily chart so you may see exactly what is going on around that level of 14651. Let's go to the daily chart, all right? You see now? You see, this is today. You see how this is today? You see here? You want to return that level. Boom. In fact, I can explain to you those key levels, why they are so important. I use another Fibonacci retracement, this time from, where are we? From the pink line, which is the 61.8% Fibonacci retracement level of that price action that I was showing you on the monthly chart. From the pink line, if I apply Fibonacci retracement, you see price going up now. Okay? If you go up all the way to the pink line, all right, in that zone, which is near the red line, which is the most important level, it may break above the red line a little bit only to find a resistance to come down. But the red line is the brick wall that we must remember. But if I apply Fibonacci, okay, retracement for the price action from here, assuming that it go all the way here, you will see that the orange line is corresponding to 50% Fibonacci retracement level of that price action from here to the pink line. This is about Fibonacci patterns. So I don't want the video to be too long, so I'm just giving it to you, all right? And then if you start coming down, we need to remember the 14651 and also 14168. This is the end of this tutorial. We do not want this video to be too long. It is about pound yen FX trader explains his technical analysis. We have an inverted head and shoulder chart pattern. The neckline is corresponding to the 50% Fibonacci retracement level of this price action down. Priority to bearish signal below that red line, and priority to bullish signal above it. But from the short term to the medium term, there is a high chance the market will try to retest the 50% level. If you come into this zone between the red and the pink line, there's a high chance that it will start going down a little bit. If it start going down, remember 14651 and 14169. With all those key levels that I have already given to you, the most important key level is 16049. Next one, 16850. Third one, okay, right here, 15178. Apart from those first three key level, remember 14651 and 14169. So as a day trader or swing trader or position trader, you want to look for an opportunity, you want to look for trading setup around those 5 key levels. If you want to achieve consistent winning trade, you are looking for breakable retest or break below retest around those key levels. You are also looking for bullish or bearish chart pattern in the vicinity of those 5 key levels. Those are the level where the professional are likely to make a trading decision. As you can see today, the price was going down. If you knew that level, you know that there is a resistance there, and you will be more careful. This is excellent opportunity for a day trader. As the price coming near this level today, 14651. Today is what? Look at the date. Okay, so it just today was in fact the 12th, so it's past midnight in London. That's why we see 13 here, but in fact today was the 12th, talking about the trading day. It's the 12th of December. So if you knew those key levels, you know that it's approaching this level. If I show you now, let's go to 3-minute time frame. You will see the reaction of the price. Look what's happening around that level. Top, top, top. All right. So by knowing those key levels, you can make excellent day trading, scalping, okay, decision. All right. You see here? Can you see a triple top in the vicinity of that key levels? Not only that, the common centralized kaput. All right, and now it's going down. That's a quick scalping or day trading opportunity right here. The price below the moving average 100 nicely here. Can you see it now? All right. This is the end of this tutorial. If you have any question or suggestion, put in the comment section, and in due course, okay, I will be recording another video to answer your specific question. You want to find high probability trading setup on the edge of key levels, on the edge of trend line, and then you want to implement, okay, the trading trigger, the setup, the signal, and the low risk entry point without violating the market pattern. All right. Happy trading to you all, and speak to you soon. We are the TSTW24 traders talking about pound yen. FS trader explains his technical analysis. Happy trading to you all, and speak to you soon.